One of my coworkers came in the other day and said, "Hey Chris, you gotta look at cotton." So I took a look at it, and it really looked like something that could turn into a really good trade. So, of course, a lot of people aren't familiar with the whole commodities world. A lot of the fame goes to the equities, but you got to think about it. Commodities are so much more volatile than stocks. So, like S&P 500 over the past 5 years. Let's see. Our low was 700. Our high was 1556. And if I go over to like this, which is a chart of the cotton ETN, in the past 5 years we went from $20 to $120 and back down to about, well, I guess now we're at 56, but the ultimate low was at just about 40. So you see, that's a lot more volatile. Like, if we would have bought somewhere around this bottom area, we could have made, geez, like 3 to 4 times more money than we had, and in a fairly short time period. So, like, the idea is what I'm looking at here is I'm noticing that we're getting a very typical, like, Wyckoff. That's the person who would normally talk about this kind of thing. A really typical Wyckoff sort of base. So, like back here, if we take a look, we saw that cotton was in a pretty much obvious downtrend. Here, I'm going to resize this so we can see everything. Alright, cotton was a pretty obvious downtrend. By the time that this ETF started being traded, it was right in 2008. Yeah, so that's as far as it goes. So, started around 50 and was declining. So, this is our bottom right here. So, we have our first bottom right here, and then we have a test of that bottom, and we see that it pretty much failed. And then we have, so what we have is this would be our bottom, and then the test, and then we have this breakout right here, which is a sign of strength, okay? And then we go to a pullback, and we would call that in Wyckoff terminology, we would call that our last point of resistance. So we have bottom, and then we have our test of that bottom, and I'll zoom in here maybe so we can see everything. We have our test of that bottom, and then we have our first breakout, in which sellers immediately, when you normally see major bottoms like this, pretty much everyone is bearish. So as soon as price breaks out, sellers immediately jump to it thinking, all right, it has to go back down. But we call that our first sign of strength. And then we have, I guess this is just typical to, specific to this individual ETF. We have this consolidation right here, and what we're noticing is that this line, this is our last point of support. So I'll delete that. The yellow circle is our sign of strength, and then this, last point of resistance. This is the last point of resistance. And actually, if we zoom into here, I think that this is going to look a lot like, yeah, it looks just like a triangle formation. So you see, we have this horizontal resistance point on the top, and then we have this upsloping trend line on the bottom. So that was pretty much just an ascending triangle. So you get the idea. It's bottom, test, breakout, consolidation, or / pullback, and then we have our breakout, and then we are in our uptrend. Now, you see what happened with this stock, with cotton last time, and I'm using BAL, the ETF for cotton, to trade since I don't think that a lot of people are approved for futures. Just a point before I keep going. Unfortunately, this ETF isn't that liquid, so you can trade the stock easily. You can trade the ETF, and the spread is pretty tight. But if you want to trade options, it's really not going to, because the spreads are like 20 to 30% on each side. So we have our breakout and then up all the way up to 120, and here we go again. back into our downtrend. So I think that we're getting a very similar pattern here. So we have our pronounced downtrend going down, going down, going down, and then we could just call it, we'll use those highest closes right there. Then we have our break of a major trend line right here. So that is one of our first signs of strength. I'll make this blue so it's easier to see. We have our bottom right there. We have our test right here. And then it pretty much looks like we're off to the races. Like, we have this initial breakout here, and then we have our second breakout right here. So this basically says that price is now in an uptrend. And if you wanted to, you could call it perhaps a head and shoulders bottom, but you'd have to say, all right, is that a shoulder, and is that a shoulder, and is that a head? Not really. Pretty much just say it was a major breakout. It was a breakout above a major resistance point, and this is our first sign of strength, and then this was our confirmation. So now the actual ETF is starting to turn down again. So if we go into the last, just a simple 9-month chart, you see that this got all the way up to about $60.50, and now it's all the way down to $56.31. Like I was saying, commodities are so darn volatile, they are very difficult to trade. So where would I say get in the trade? So first we can do a Fibonacci retracement bracket. So if I just do to the first minor reaction, the second one, and then finally the third one, and notice I'm using the close of this spike. So what we're looking at is pretty much we have a key support level right here around $55.50, and then we have another key support level at just about $52.50. So I would expect price to most likely reverse at one of those, and if it doesn't reverse, I would suggest making the complete 61.8% retracement right here around $51. That would be our stop level. So if I can erase all of these, so remember this number, 55.50, 52.50. If I could erase these, I really think that the best way to get into this trade is to take a small position once it declines to about $50.55, and then you could take a further position if it declines to $52.50, and then you can get out of the trade if it drops below like around $50.75. So that's going to give you, on average, let's see, so we're looking at about 4% risk on, no, we're looking at about, 4% risk on this side. We're looking at about 8% risk on this side. So you're risking about 6% downside, and your reward is that you're expecting something like this to happen again. Notice that after once the bottom is formed, off to the races. So it's pretty high. It's a pretty low risk, high reward trade comparatively. So once again, using traditional analysis, where would I expect price to bottom? If I go into the 1-year chart here, we can do just simple trend lines. So this says that price would bottom around $50, and honestly, if it declined below this trend line, then I would say that these bottoms were invalid and that we don't have a major bottom in place. Another one, which this is the one that I would probably use, says that our major bottom will be, there you go, right around 52.25, and then we can try this one. I think this one's going to break through pretty easily. This one lines up with just about, actually that's interesting, because if price declines to this, that's about 55.50. So we're getting pretty close to where our Fibonacci retracement said that there would be some support. So that is what I would do to get into this trade. And remember, one last thing. If I bring up the RSI, if you see this become overbought, like it is now, It is overbought on a weekly basis. What happened the last time that it was overbought on a weekly basis? The price was at about 45, and it stayed overbought until it was at about 100. So you need to consider overbought as a sign of strength. And that works for most cases too. Of course, it means that's going to be a little more risky to buy, but if we can get rewards like this, it's usually worth it. Alright, thanks for watching. Happy trading. And remember, the symbol is BAL. And no options on this one unless you want to get killed by the market makers. Alright, thanks for watching.